Facebook is set to report fourth quarter earnings after the bell. The company has had a long history of beating expectations, and this quarter, ad dollars and Instagram continue to fuel analyst optimism. Joining us now to give his outlook, Yusuf Squali, analyst at Cantor Fitzgerald. Yusuf, appreciate you joining us today. Your latest note emphasizes that user growth and engagement has continued at an unabated rate. How does this play into your earnings forecast? What are you expecting?
So we expect Facebook to be one of the fastest growers in the space. Channel checks have indicated that growth this quarter should be somewhere between 40 and 50%. That's for social spending, and Facebook is the primary beneficiary of that. So we expect Facebook to grow somewhere in the 40% range and generate margins somewhere around 65%. That's slightly higher than the average of about 60%, but again, Q4 is seasonally strong. So we expect to see a fair amount of scale in margins. So we're going into the quarter feeling pretty good about the numbers.
Instagram, the photo sharing app, has been gaining more popularity with marketers. How big of an opportunity is that for Facebook this quarter?
Well, this quarter we think it's going to be relatively small. Instagram, the monetization of Instagram has just started a couple of quarters ago, but the ramp there has been pretty steep. We think Instagram will do somewhere between $1 billion to $1.5 billion in 2016, but in the fourth quarter of 2015, we think it's still relatively small. That said, it's large enough to start moving the needle for the company and sustain that 40% or so growth rate that I spoke about for the fourth quarter into 2016. We think that's pretty exciting.
Got it. Now, usage on mobile has continued to increase pretty steadily. What is your take on advertising power on mobile devices? Are there any risks there, given that there are many other social media companies that are trying to get those same dollars?
Well, we think to a certain degree, Facebook has become to mobile what Google search has become in mobile, i.e. Google controls somewhere around 85–90% of search spend on mobile. We think Facebook will end up dominating mobile spend, display spend on mobile. The company, which at the IPO was thought of as having a big problem for mobile, has been able to turn it into a huge opportunity. We think this quarter they'll do somewhere around 80–85% of revenues driven by mobile already, advertising revenue. So we think they're very, very well positioned there.
Yusuf, it's been a tough year for tech. How should investors position themselves ahead of Facebook's earnings? Because the stock is down about 7% year to date. Do you think this is a good time to buy?
We do. Look, the market is obviously jittery. This is a company that last year was up about 24%. For the last 2 years, it's up 80%. So the returns have not been that shabby. That said, we think for investors that are looking to own this asset for the next 6 to 12 months, this is a good time to buy. Very hard to call the bottom, but if the quarter is good and if we don't hear anything negative in the commentary, that we think this is definitely a good opportunity to be either building positions or adding to existing positions.
We'll see what Facebook reports. I'm also interested to see what Mark Zuckerberg has to say about the next quarter. Yusuf, thanks for joining us this morning, and all of you, thank you for watching. I'm Seema Modi. Have a great day.
Hey YouTube fans, I'm Landon Dowdy from CNBC. Thanks so much for checking out our channel. Here you'll find videos packed with all the info that you need to be smarter about your finances. Be sure and subscribe by clicking right here, and click on all the videos around me to see CNBC's original series Young Money, Tech Bet, Kramer's Mad Money, and all the latest from CNBC.